It's Brian Preston, the money guy.
So obviously we've kind of walked through what wealthy people focus on, the things that kind of occupy their mind, where they focus their efforts. We thought it would be valuable too to kind of share with you guys, all right, what is it that wealthy people worry about? And this is really more about what they don't worry about, the things that you're not going to hear. But we want to say, okay, well, wealthy people, when they think about their finances, they think about things that should be concerning them. What are the things that are kind of on their mind?
And by the way, you guys, some of you, these are echoes from some of the stuff that's placed in the comments section.
Absolutely.
So I want to give you guys some kudos on that. But let's talk about these. One of the first things I hear a lot of wealthy people talk about is they are worried about inflation.
Sure.
We've had an extended period of time with interest rates being at close to zero or super low. And people, you kind of alluded to this earlier, Bo, they recognize that with all the debt that a lot of the governments of the world have, that the only way you can get out of debt when it gets to be it also is so big that it almost seems like the Sunday comics, is that you kind of have to inflate your currency at some point. And look, I'm not trying to be scare you guys, because I think that we could go many, many years, as we've seen with super low interest rates, especially when all the central banks are kind of colluding to keep interest rates low. But it is something to be aware of. At some point, interest rates will go up. Inflation is starting to creep in. I had a builder friend of mine share that plywood that normally is under $10 a sheet is now over $30 a sheet. When I hear stuff like that, I'm like, wow, there's inflation kind of creeping into things that are not in the CPI, which is what the government uses to measure inflation. So here's what we know. How do you combat inflation and this concern that the dollar might be decreasing in value? You own stuff. But, Bo, we talked about this in show prep, and there's actually, I thought, once again, going back to the Oracle of Omaha, Warren Buffett, he said if you ever get overwhelmed or you start getting nervous about what the state of the economy and how will we make it through inflationary times, and he had a great share about Coca-Cola and wages. How does that go?
Yeah, he was essentially saying, so long as we live in this world where you're willing to trade a little bit of your time to do a vocation, and for that time, you get some dollars, and with those dollars that you receive, you go and buy a Coca-Cola, and that Coca-Cola was manufactured by someone who's willing to trade their time for a few dollars. And that, so long as we live in that type of society, if you own businesses, if you own real assets, you're going to be okay, because what Coca-Cola can do is it can charge a little bit more for the products. And when they charge a little bit more for their products, they might have to pay a little bit more to the workforce. So long as that's going on, owning real assets and participating in that is going to be beneficial.
And by the way, you could replace Coca-Cola for washing machines, vehicles. I mean, I think it's a great analogy for just understanding that if prices do increase, if you own stuff, just like in real estate, values go up, but just like when you're dealing with Coca-Cola washing machines, companies can always increase the prices. So pay attention to that. The second thing that I think wealthy people really worry about, and this is an important one, I don't think we have a client that this doesn't come up if they have children, and that's legacy. And what I mean by this is both financial and non-financial, because a lot of you guys, you hear legacy, you're like, oh, they just want their name on the side of a building. No. I think what they're worried about, and this is something I've thought about, is if you build success, how do you not screw the kiddos up?
Yeah, that's one of my, I don't want to say biggest fears because it sounds so negative. You know, I grew up from very humble beginnings. My childhood looks very different from what my daughter's childhood is presently looking like. And I feel some pressure with that. I'm like, man, I want them to understand the things that I was forced to understand. But even though they don't live in a world where it's forced, how can I make sure I'm still getting that across to them? How can I make sure I'm still teaching them those things?
We know the stat that 80% of millionaires are first generation. So that means second and third generations, the children of that 80% must be screwing it up somewhere. And I think that is a fear. And then also, I mean, you mentioned scarcity. Most millionaires, since we know 80%, do grow up from pretty humble beginnings. And scarcity does teach discipline.
Absolutely.
Because look, your parents tell you no all the time. When you grow up, in middle class and below, you know what it's like to want to go do something
and not be able to.
Told no. It's harder when you come from a family that things are going well. And a lot of you financial mutants will struggle this as you have successes. It's hard to say no when to create that discipline when you don't have
When
to.
you don't have to.
So here's what we tell people to do is make sure your children understand the value of a dollar and the power of the army of dollar bills. That's why, I always share that we do matching programs at my house to try to get my teenage daughter excited about savings. We also talk about the need to be generous with, giving, as well as the power of saying thank you, to always be gracious and understand, be a good recipient when people do stuff for you, when things are, because there's always going to be, no matter how successful you are, somebody helped you to get there. So you need to be a good person that can say thank you, and that will always help you to kind of hone past the limitation that you didn't grow up with scarcity. Because I think scarcity is actually a super great trainer.
Sure. So we know that wealthy folks don't want to screw up their kiddos. So let's give them a benefit of the doubt and say that, okay, they've raised them well. And odds are, if you plan really well, your goal is not to leave this earth with zero. You don't want to spend your last dollar, your last day on this earth. You're probably going to leave something behind. So one of the things that we notice that wealthy, successful people try to think about is how do I pass on assets well? How do I efficiently transition excess wealth that I've created in my lifetime so that it can be to the benefit of my heirs or my organization or the things I want to support when I'm not here?
Well, the first thing, avoid making those bad end-of-life decisions. It makes me cringe a little bit, and I've even dealt with this with relatives where they'll come and ask me questions and be like, was it okay that I changed the title on this piece of real estate because, so-and-so's gotten sick, so it seemed like it made sense to get those assets out of their name as fast as possible. Or worse is, hey, I'm worried about some of these end-of-life decisions. I'm going to put the kiddos on my checking account. Is that okay? These are all, you're creating gift situations. You're also maybe blowing a step up in basis by passing away with appreciated holdings. These type of just reactionary type decisions people make at end of life are kind of one of my biggest pet peeves, because you're not making good decisions. Sometimes it's better if you have a relative or even yourself thinking ahead from an estate planning standpoint to die with appreciated holdings.
Absolutely.
I mean, because your children will receive a stepped up asset, currently a basis that's higher. They won't have to pay income taxes or estate taxes because the estate tax exemption is now over $11 million as a combined couple, $22 million.
Yep.
I mean, these are high enough limits that there are definitely good ways to do this. So make sure you focus on the structure instead of just making those knee-jerk reactions and getting yourself in a pickle of a situation.
That's what I was going to say. Society tells us that, it's got to be complicated, it's got to be advanced, it's got to be sophisticated. When realistically, the things you ought to be doing if you're worried about legacy are pretty simple. Make sure that your estate documents are updated. Make sure you have wills and healthcare directives and powers of attorney. Make sure that the beneficiaries on your retirement accounts are structured to match your estate plan. Make sure that beneficiaries on life insurance is structured correctly. You don't have to do all the complicated, crazy, hard stuff. Sometimes just getting the very small, very easy things right is enough.
Yeah, definitely focus on those things. And I think between training the kids well as structuring, you will have a great legacy to pay it forward, and your financial mutant ways will hopefully pay it forward to the next generation as well. The other thing I thought, that the third thing that wealthy people worry about, and this is longevity. And I've always liked, if you've watched that Warren Buffett documentary on HBO, he starts off that documentary sharing that he goes and speaks to a college class, and he says, I believe it's an accounting class, because that's not shared, but I saw the textbooks. That's how nerdy I am. I wanted to know what class he was talking to, and it was an accounting class. And he told them, look, I'm going to tell you as a wealthy person, what if I came in here and offered you any car you wanted, but there's one catch. You can only have that car for your entire life.
You only get one car.
You get one car, and it's got to make it your entire life. And then he brought it to that what he's talking about is you. I mean, if you think about it, when you come out, your body is all you get. You only get one heart, two kidneys, the liver, your brain. It's all that's it. So you better take care of it. You better treat it, because I think we take that for granted when we're younger. And as we get older, you got to focus on not only keeping the brain sharp by reading, expanding your knowledge, but also exercising and getting that annual physical. Yep. Those things will keep you you're safe to focus on the physical aspects of longevity.
And there's nothing wrong with being a prolific saver. One of the reasons we've even built the financial order of operations is so that you don't feel like you have to be a miser and you don't have to have a 70, 80, 90% savings rate. But if you can get your savings rate right early on and you can get to that 20 to 25% savings, one of the best ways you can combat living a long time is to make sure you have a very strong army of dollar bills. That's a great way to combat living too long. Make sure you saved enough and make sure you saved well.
I want to close out the show, Bo, because we're in unique times right now. I feel like we're a country that's got some turmoil and some other things, and I'm definitely a glass half full type personality. Call me an optimist.
I love it.
I mean, because we know from our own research, optimists do better in life. So take a life lesson from that. But we are dealing with, and you had a great saying, Bo. I thought this was kind of a nice way to close it because we were talking about things that wealthy people do not worry about. And you had a saying it was kind of, I envisioned like a Monopoly board. Yeah. And what was that saying?
Yeah, I said, with all this stuff going on in the world, we don't get to design the board. And like we individually, even specifically, don't get to like write the rules. All we get to do is move our piece. We get to just move our piece the way we move it. But if you can move your piece well, given the design of the board and given what the rules are, odds are you're going to be okay.
Well, and that's what we talked about in our recent quarterly commentary that we just recorded for clients, is we don't make decisions on what we think will happen. Because look, humans, we all have lots of blind spots. We all make decisions. And it ties into your game piece analogy you just talked about. We make our decisions off of what your goals are, what your age, what your risk, as well as what we know the rules currently are. So don't get caught up in all this other stuff. And that leads to, just like we have market volatility that might be coming, we've had a lot of political stuff. Yeah. And once again, you've been on fire with your sayings recently. You had a great political statement too. What was that statement?
I said, it's not red or blue. Our money's always green. And that's the thing you need to focus on. It doesn't matter, red or blue, the money stays green.
So focus on those things. Don't let the noise get you down, guys, because we're going to always go through periods where it's going to feel like it's unique, a new paradigm. And that's something you've got to be very aware of, is that know your goals, know what you're aspiring to, and that's going to help you. And then here's the last thing. It's kind of know what your why is and know what makes you happy, because having more of it is not necessarily going to lead to more happiness. And I think this is something I have found as I've matured in my walk with wealth creation, is that we have a tendency, the more we have, we tend to move the goalpost and the goals. You need to figure out your why so you know what contentment is. What is actually what leads you to feeling a fulfilled life, and that's going to be the part that lets you wake up, feel good, that you are making the world better every day. And at the end of the day, that's all you can hope for, and hope that you can build kiddos that are doing it right, that you have the life that you've always dreamed up and become the best version of your financial self. That's what we hope to share on the Money Guy Show. And we just thank you for coming in and joining us. Go. Make sure you can see we're now over 100,000 subscribers. Make sure you give us a subscribe on YouTube.
Yep.
Make sure also that if you're making those strides of success, you've been listening, you've come and you've taken advantage of the abundance cycle, you've learned, applied, and grew into a level of success that you're looking at yourself and going, man, what do I not know? Or wouldn't it be nice if I had a co-pilot to help me make these big decisions? We do work with clients all across the country, but that's why we give it away. We want you guys to make good financial decisions so you can be the best version of yourself. And we appreciate you jumping into the shows, How Wealthy People Save and Spend Their Money. I'm your host, Brian Preston, Mr. Bo Hansen, Money Guy Team, out.